A crypto project just raised $140 million from Silicon Valley's top venture capital firms. They're claiming to solve Web3's biggest storage problem with technology 100 times cheaper than competitors. But with 73% of tokens going to insiders, can this actually work? Today, we're analyzing Walrus, a decentralized storage and data availability protocol built on the Sui blockchain. Created by Miston Labs, the same elite team behind the Sui blockchain and formerly Meta's Diem project, Walrus positions itself as the foundational data layer for Web3 applications and AI-era data markets. Currently trading around 6 cents with a market cap of $62 million, but a fully diluted valuation near $300 million. Walrus isn't just another decentralized storage competitor trying to be a cheaper Filecoin. The game changer here is programmability. By representing stored data as native objects on the Sui blockchain, Walrus makes storage directly controllable by smart contracts written in Move. This means your DeFi protocol can programmatically transfer ownership of entire datasets. Your dynamic NFT can link directly and trustlessly to its high-resolution media file. The technology behind this efficiency is called RedStuff, a proprietary two-dimensional erasure coding algorithm. Instead of storing multiple full copies of your data, it breaks files into fragments and generates redundant pieces. You can recover your full file even if 2/3 of storage nodes go offline. The result? Walrus achieves 12 nines of data availability. That's 99.999% uptime, with only 4.5 to 5 times replication instead of the 25 times required by traditional systems. The numbers show real adoption happening. The network has grown from 869 terabytes in July to over 4 petabytes by October 2025. They've secured partnerships with major players, Talus AI and Eliza OS for decentralized AI memory, Pudgy penguins for NFT media storage, and Claynosaurs generated $20 million in volume using Walrus. On the institutional side, Grayscale launched a Walrus Trust, providing regulated exposure for accredited investors. Currently, the protocol generates around $123,000 in annualized revenue. This is where Walrus truly stands out. The core team reads like a who's who of blockchain engineering. Evan Cheng, CEO, former head of R&D at Meta's Novi, won the ACM Software System Award for his work at Apple. Sam Blackshear, CTO, creator of the Move programming language. George Danezis, chief scientist, professor at University College London. The $140 million funding round was led by Standard Crypto with participation from A16Z, Electric Capital, and Franklin Templeton. But here's where things get problematic. The tokenomics present massive long-term inflationary pressure. 73% of the total 5 billion token supply is allocated to the Walrus Foundation and core contributors. Breaking that down, 43% to community reserve controlled by the foundation, 20% to early contributors with 1-year lockup, and 10% to subsidies over 50 months, and 7% to investors. There's a major unlock cliff coming in March 2026 when both early contributors and investors can sell for the first time. That's 27% of total supply potentially hitting the market at once. For the token to hold value, the protocol must generate enough fee-burning activity to offset a decade of token emissions. There's also a critical dependency risk. Walrus isn't a standalone blockchain. It relies entirely on Sui for security and coordination. If Sui fails, Walrus fails. So what's the verdict? Final due diligence score 7.8 out of 10. Breaking that down, technology and innovation 9 out of 10. Team and execution 9 out of 10. Product market fit 8 out of 10. Tokenomics 5 out of 10. Risk profile 7 out of 10. Investment recommendation: hold or cautious buy for risk-tolerant investors. This is a technically sophisticated project with world-class execution capability. If you're considering an investment, you're betting on the Sui ecosystem's long-term dominance, explosive growth in decentralized AI and on-chain data, and the team's ability to generate massive network effects before that March 2026 unlock. Remember, cryptocurrency investments carry significant risk. This analysis is for educational purposes only and is not financial advice. Always do your own thorough research before making any investment decisions.